What's going on, guys? Welcome back to my market analysis series. In our last video, we spoke about price trends and we identified that there are three main types: uptrend, downtrend, and price consolidation. Today, we're going to build on that and we're going to dive into what's known as multi-time frame analysis, otherwise known as top-down analysis. So without any further ado, let's get into it. As the name suggests, multi-timeframe analysis is the process of analyzing your charts on multiple timeframes to form a clear bias. Traders do this by using what is known as top-down analysis. Now, this is when you start your chart analysis on the highest time frame relevant to your trading style and then work your way down to the lower time frames. The reason why your multi-time frame analysis must be tailored to your trading style is because, as you may already know, we have three main types of traders. We have the swing traders, the day traders, and the scalpers. Now, in the case of swing traders like myself, your trades typically last from a few days to maybe a few weeks. So, because of that long-term trading style, your multi-time frame analysis need to give you the overall direction of the market for the long term, which means that your top-down analysis would start on the weekly time frame for the overall trend, and then the daily chart would give you market structure, and the 4-hour chart for your entries. You can also go down to the lower time frames like the 1 hour or the 30 minutes time frame to get a more precise entry or a sniper entry, but you should keep the overall trend in mind, seeing that your trading style is more long term. Day traders, on the other hand, you're basically in a trade for a few hours up to a full day. So because of this, your trading style is more intermediate. It's not long term, but it's not short term either. So this means you would have to shift your multi-time frame analysis lower. So instead of starting on the weekly for your trend, for your overall trend, you'll start on the daily chart. So the daily chart would give you your overall trend. The 4-hour chart would give you your market structure, and the 1 hour and lower time frames, you would use that for entries. And then for scalpers, you're basically in and out of the market within minutes. So your trades typically last anywhere from 5 minutes to 15 minutes. Because of this short-term trading style, your market analysis is focused entirely on the lower time frames. So you could probably look at the 1 hour chart to get your market trend, and then the 30 minutes and 15 minutes time frame, you would use that for market structure. And then for entries, it's going to be on the 5 minute and the 1 minute time frame. But it doesn't matter what type of trader you are, you should always keep this in mind. The higher time frame controls the lower time frame. So whatever trend is dominant on the higher time frame, that's what the lower time frames will follow eventually. Now, for the purpose of this video, I'll only be focusing on the multi-time frame analysis for swing traders because, like I said, that's the type of trader I am. So let's go ahead and take a look at the charts and let's get into it.
Now, it is currently Wednesday, January the 7th, 2026, 10:32 p.m., and we're looking at the currency pair Euro USD. This is the weekly time frame, and the first thing I normally do when I'm doing my markups for the chart is I would identify the most recent swing high and the most recent swing low of that current chart or time frame. And as we can see at the moment, the most recent swing low on the weekly chart would be this point right here. And this is the most recent swing high right here. Now, as you can see clear as day, we were at a low right here. We move up to form this high. Then put in this higher low and then this higher high right here. So price has yet to put in a higher low. So it is safe to say that on the weekly time frame, price was trending to the upside, as you can see over here. But we want to stay as close to price action as possible. Now, if you pay attention to right here, this little area right here is the closest to price action we're gonna get. All right, so let's mark up what's happening there. We have our swing high right here, but this swing low down here would be too far away from more recent price action. So let's find a closer swing low. The closest swing low would be this low right here. This is the lowest point that price printed before it made the swing high. So let's mark that out as our new swing low. What we can see now is that price put in the swing low, it formed the swing high, and then it haven't broken either the swing low or the swing high. So it's moving more sideways. And you already know when market is moving sideways, it's consolidating. So now that we have our most recent swing low and our most recent swing high on the weekly, and we can also identify that price seems to be in a zone of consolidation, we can go down to the daily chart to get a more refined illustration of what that looks like. So this is the daily chart for Euro USD, and we already identified that it was consolidating on the weekly. So let's mark out the zones of resistance and the zones of support for this area of consolidation. So now that we have our area of resistance and our area of support marked out on the daily chart, we can see clear as day that ever since price made this swing low on the weekly chart and this swing high on the weekly chart, we have kind of been trading between those levels. We have this downtrend right here. Then, after price broke out of this downtrend right here,
If you watch my videos about price trend, you would know how to identify when a trend shifts from a downtrend to an uptrend or when a trend shifts from an uptrend to a downtrend.
so we had lower highs and lower lows over here. We have a high, lower high, lower high, lower high, and a lower high. Then we had a low, a lower low, a lower low, and a lower low. So after price broke or closed above this most recent lower high right here, the trend shift from a downtrend to now an uptrend. So this little area right here was price shifting from a downtrend to an uptrend until price action got to our level of resistance. Now, after it got to the level of resistance, we got rejected. And then look what happened right here. Price closed below this higher low right here. So now we're going to create a lower low, which means that the trend is now shifting from an uptrend to a downtrend, which also means that the area of consolidation will continue. So on the daily chart, it is safe to say that price is consolidating like it is on the weekly chart. So we're not getting a higher high or a higher low on the daily chart to continue the uptrend that the weekly chart was in. So now price is consolidating. So now we need to go down to the 4-hour time frame to see if price action would confirm that this right here is a change in trend direction for this uptrend right here. All right, so now we're on the 4-hour time frame, and you can see clear as day that we had an uptrend right here where price was giving you higher highs and higher lows. Until we got to this part right here where price closed below the trend line and then closed below the most recent higher low. And now this looks like the early beginnings of a downtrend where we're having lower highs and lower lows. So as you can see, it is safe to say that the price consolidation that is taking place on the daily chart will continue, and price will push downwards to try and find support, this daily support right here. You can see that this is where price is targeting. So as a swing trader, I would be looking for shorts because we had an uptrend, then price broke that uptrend right here. And now we're getting lower highs and lower lows. So the next level for price to break would be this most recent swing low right here. So that would be where I would be eyeballing for entries. If we go down to the 1 hour time frame, you can see that we already have a pretty decent downtrend. As you can see, the moment we got rejected here, we also consolidated, then we broke that zone of consolidation and we started moving to the downside. So this is a clear example of why we say that the higher time frame trend is the dominant trend. So whatever the higher time frame is doing, you should expect that lower time frames are going to follow. Now for swing traders, you should be eyeballing this weekly candlestick to see if it would close below this level of support right here. I'm trying to get as close to it as possible without touching it with the cursor. But yeah, you should be watching this weekly candlestick to see how it closes. Seeing that you're more of a long-term trader, this weekly candlestick would give you the confirmation that you need to determine if you should take a short to target this level of support right here, or if you should wait for more confirmation. You can still you can still be in a short position, but it would more likely be short term than long term. So you shouldn't be looking for a longer term short position. For example, price pushing below this level of support and this level of support right here. As a swing trader, you shouldn't be targeting those levels until we get a confirmed close below here. So you can still take a short-term trade, but your exits should be right here as a swing trader. For day traders, you enter and exit the market day by day. So you just want to know what's likely to happen for the next trading day. So this candlestick right here would have given you confirmation that the market is more than likely going to go lower, which is what happened the day after. So this is a close below, and this is a confirmation candlestick for this close below. So these two candlesticks are basically telling you that price more than likely wants to go lower. So you should be looking for short entries on the lower time frame. Seeing that this is the daily chart, you'd want to go down to the 4-hour chart and you'd want to see this level right here being closed below where you take your short entries. And as you can see right here, this is a price reversal candlestick pattern, which basically tells you that price is not ready to break through this zone yet and you should expect a reversal, which is kind of what's happening in this candlestick right here. But you can't count this as a valid candlestick until it closes in 1 hour and 56 minutes. Now this is the 1 hour time frame, and as you can see, we did push away from the level of support, but then while we were going up, what did we get? We got another reversal candlestick pattern right here. This is a doji, or close to a doji. So this is also telling you that price is rejecting higher price and we might go lower. Right, and this is a brand new, well, this 1 hour candlestick was just formed. As you can see, well, you can't, oh yeah, there it is. As you can see, it is 11:04. So this just got completed. So if I was trading, I would take a short right here and my stop above this candle, take profit below this one right here, because we already know we already got a rejection. Oh, I gotta go all the way up there. We already got a rejection right here, and we already know that price is in a downtrend. We know that this is the target. This zone is the target to be broken. So, as a day trader, I know it is safe to take my sell entry here and just hold it until my targets are met.
1 week later.
All right, so it is now January the 14th, 2026. It's approximately 1 week after I made the first half of this video. And the reason why I'm making this video is to show you the outcome of my chart analysis. Now, this is the weekly chart and nothing much have changed. The only thing that I would say is significant is that this weekly candlestick right here, we got a complete close on it. So we can see clearly that last week did indeed close below this zone right here and also this one, like I said it would. Not trying to make myself look like a prophet or anything, or I'm not trying to brag either. So let me change that phrase. It closed below these zones like I expected it would due to what price action was taking place. So what we're going to do is we're going to go down to the lower time frame. We're going to look at the daily chart and the 4 hour chart, maybe the 1 hour chart, to basically see what had transpired. So let's start on the daily. So if you were paying attention to the first half of this video, you would remember that we didn't get a break of this zone yet. So after I made that video, the following day we got a break right here with this candlestick, and then we got a follow through of that break. So after I made that video, we got 2 trading days of price selling off. So if you were trading on those days and you analyzes the chart the way I do, then you would have been able to capitalize on this downward movement right here. But we're looking at price action, and in the terms of price action, you can see that we got a break and a retest and also a rejection. So this right here on the daily chart is basically letting you know that, okay, we broke the zone of support, we retested it and turned it into resistance, and now we're ready for lower price action. So now the 4 hour chart, and we're still focusing on this price action right here before we got the break. You can see we had the rejection of the zone right here. Price pushed up and then it returned to that area of rejection to see if support will still hold. and then we got a break. Then after we got a break, price sold off until we found support here, and then we return to that zone to retest it to see if the zone is still strong and to see if we can turn that area of support into resistance. Also, what you can clearly see on the 4-hour chart now is a valid downtrend. So now we know that the trend has changed. We're no longer moving up to the upside. Even though we had already established that when we got the break of this low for this uptrend over here, this is now giving you more confirmation that we're now in a downtrend. So no price is targeting the lows and it's respecting the highs. We're in a downtrend. Alright? But I want to focus on this area right here. So I want to focus on that gray area right there. We're going to go down to the 1 hour time frame and we're going to take a look at what happened. I did call out a trade and I said that if you had taken a short right here and put your stop above this wick, then that would be a pretty decent trade. And as you can see, price did try to push up, but it did not get higher than the wick of this doji right here. So that was an area of resistance, a clean area of resistance. And then after that area was respected, price sold off and then it broke the zone and it continued going down for 2 days. So you could have capitalized on this move to the downside and you could have made some pretty decent profits. But anyways, the purpose of this video is just to show you that the analysis works and I don't have to use bar replay to choose a particular area in the market where my analysis would work. I did this on the live charts and then of course I had to wait a whole week for price action to play out so that you can see that whatever I said was going to happen happened, not because I'm trying to be a know-it-all, but just because price action will always respect the principle of a trend. Like if it's a downtrend, it's gonna respect the highs and disrespect the lows by breaking them. And then if it's an uptrend, it's gonna respect the lows and disrespect the highs. It always does that. And price generally only move in three different directions. It's either it's trending to the upside, trending to the downside, or trending sideways. And if you learn and understand how these three different trends work and the principles that governs them, then it doesn't matter what the market is doing, there will always be an opportunity for you to make money in the market.
No, that's basically the gist of multi-time frame analysis. This video did take a while for me to make because instead of doing bar replay, I actually did my chart analysis on the live market, so I had to wait for it to play out. Now, I'm going to show you one last thing before we go, and that would be what the end of this week looked like. So it's going to be for the 16th of January. Also, I didn't say in the beginning of the video, but this is actually my first video for 2026. And it's in January, so I guess Happy New Year is in order. So Happy New Year. I hope that this trading year works out in your favor this year, and I hope that I help you to improve on your trading journey. But that's it for multi-time frame analysis. So I'll see you in the next one.